A choice that can shape your financial future. Real estate or stocks? Both have their merits, but which one should you invest in right now? Welcome to the debate of the decade, real estate versus stocks, where we break down the pros, cons, and potential returns to help you make an informed decision. Let's dive in and explore your options. But before we begin, make sure to like this video and subscribe to our channel to watch more videos like this. The rising tension, real estate or stocks? So, what's the deal? Are stocks really the superior investment, or is real estate the safer bet? The truth is, it depends on your financial goals, your risk tolerance, and your investment strategy. Real estate has long been considered a solid, steady investment that offers stability, but stocks have delivered incredible returns in recent years. The decision to invest in one or the other may seem daunting, but let's break it down. The world of real estate has a history of providing reliable returns, but that's not the whole story. In contrast, stocks have shown exponential growth, especially during times of economic expansion. So which is better in today's market? Let's look at the pros and cons of each investment to help you make a more informed choice. The case for real estate, a tangible asset with stability. Picture this: own a property that generates monthly rental income. This income isn't just a dream. Real estate has long been one of the most trusted forms of investment. But what makes it so appealing? Let's explore. Real estate offers stability, something many investors find comforting, especially when the stock market seems like a roller coaster ride. Property values tend to appreciate over time, making real estate a relatively low-risk investment. The housing market doesn't fluctuate as wildly as stock prices. Real estate is a physical asset, meaning you can see it, touch it, and know exactly where your money is. This tangible quality gives many investors peace of mind. Beyond the property value itself, real estate also offers another key benefit: rental income. If you're lucky enough to buy property in a desirable location, renting out your property can provide you with a steady cash flow. This is what makes real estate particularly attractive to investors looking for income generation in addition to asset appreciation. However, it's not all sunshine and rainbows. Real estate comes with certain drawbacks. First, it requires a significant amount of capital. It's not uncommon to need a hefty down payment before you even start seeing a return on your investment. Moreover, managing property requires time, effort, and sometimes dealing with troublesome tenants. If you don't want to handle it all yourself, hiring a property manager can eat into your profits. But despite these hurdles, real estate remains a strong choice for many. It's an investment that's tangible, steady, and provides the opportunity for both passive income and long-term appreciation. Stocks, a wild ride of high returns. On the other side of the spectrum lies the stock market. The allure of high returns is impossible to ignore. Stock prices can soar, taking your initial investment with it. But just how reliable are stocks in today's economic environment? Let's dive into that. Stocks have delivered significant returns in recent years, outperforming real estate in some cases. From the 1980s to the present, the stock market has averaged annual returns of around 10%. This has been particularly evident in major stock indices like the S&P 500. With the power of compounding returns and reinvested dividends, stocks can offer explosive growth potential. But with great returns comes great risk. Stocks can be volatile, with prices swinging wildly from one day to the next. This volatility can be unsettling for some investors. A single global crisis, a change in interest rates, or even an earnings report can send a stock into a tailspin. If you can handle the risk, however, stocks offer the potential for high rewards that real estate simply can't match. Stocks also provide more flexibility than real estate. They're easy to buy and sell, allowing you to access your money quickly if needed. Plus, with the advent of ETFs and index funds, it's possible to invest in stocks with a relatively low amount of capital, diversifying your portfolio to spread out risk. But as with any investment, timing is key. While the stock market has shown impressive returns, it can also be subject to significant downturns. The recent pandemic, for example, sent stock markets plummeting, while real estate remained more stable in many areas. The timing of your investment in stocks can make all the difference. Risk and reward, balancing your portfolio. Now that we know the benefits and challenges of both real estate and stocks, let's talk about the most critical factor: risk. Real estate is generally considered a safer bet compared to stocks. Property values may fluctuate, but they usually don't see the kind of sharp declines that stocks can experience. However, the risks associated with real estate should not be underestimated. Market conditions can change, interest rates can rise, and sudden repairs can drain your finances. Stocks, on the other hand, offer the potential for much higher returns, but they come with much greater risk. The stock market can be volatile, and economic downturns can cause substantial losses. For someone with a higher risk tolerance and a long-term horizon, stocks may be the way to go. If you're more risk-averse or looking for stable income, real estate may be your best bet. But here's the catch. It's not about choosing one over the other. Successful investors often blend both stocks and real estate into their portfolios to balance risk and reward. The real estate advantage, leveraging property for maximum returns. One of the biggest advantages of real estate investing is leverage. Unlike stocks, where your returns are based solely on your capital investment, real estate allows you to borrow money to increase your returns. By taking out a mortgage, you can control a property worth much more than your initial investment, multiplying your profits if property values rise. Imagine buying a property with just 20% of its value up front. If the property appreciates in value, your return on investment can be much higher than if you had invested the full amount in stocks. However, this leverage can also work against you. If property values decline, you're still responsible for the loan, which can lead to significant losses. Stocks, however, don't offer the same kind of leverage. While margin trading is an option, it comes with its own set of risks. The volatility of stock prices means that borrowing money to invest can result in substantial losses if the market moves against you. Tax benefits, how real estate and stocks stack up. Another factor that often tilts the balance in favor of real estate is its tax advantages. Real estate investors can deduct mortgage interest, property taxes, and depreciation from their taxable income. This can result in significant tax savings, especially in the early years of property ownership. For stocks, the tax benefits are less pronounced. Long-term capital gains are taxed at a lower rate than short-term gains, but there are no deductions like those available in real estate. However, dividend income from stocks may be taxed at a preferential rate, depending on the investor's tax bracket. Real estate versus stocks, which one should you choose? At this point, it's clear that both real estate and stocks have their merits. But which one is right for you? The answer lies in your financial situation, your risk tolerance, and your investment goals. If you're looking for a tangible asset that provides steady income, long-term appreciation, and potential tax advantages, real estate may be the better choice. It's ideal for investors who prefer stability and want to diversify their income streams. On the other hand, if you're willing to take on more risk for the potential higher returns, the stock market offers incredible growth potential. With the right strategy, stocks can generate substantial profits in a relatively short amount of time. So which side are you on, real estate or stocks? Both have their unique advantages, but the right choice depends on your goals and risk tolerance. What's your take on this investment debate? Let us know in the comments below. If this video helped you make a more informed decision, don't forget to like, share, and subscribe for more investment tips.